Hello. Today we're going to be talking about Invesco's S&P 500 Momentum ETF. I just got to 100 shares in my portfolio. It's a new position. We're going to be taking a look at the funds and why I am staying on track, still setting those limit orders, still building into my position. I'll explain what the fund is, why it's outperforming the S&P 500, as well as funds like QQQM that are heavily weighted into tech. If you're new here, I am Lisa J. Stocks. If you're not already, subscribe, give this video a thumbs up, and hit that notification bell so you can come back and catch more of my videos and live streams. Okay, so let's get into it. What is SPMO? It is Invesco's S&P 500 Momentum ETF. It has a low expense ratio, in my opinion, considering the performance of 0.13%. The inception date of this fund is 10/9/2015. It has 100 holdings. This ETF owns the strongest performing large cap stocks based on recent price trends, or what we call momentum. It's part of what's known as a factor ETF, which means that it targets specific investment style, in this case, momentum, or stocks that have been doing well and are likely to keep performing strongly. So it says here that this index tracks the performance of stocks in the S&P 500 index that have a high momentum score. The fund is reconstituted and rebalanced twice a year on the third Fridays of March and September. So we're going to take a look at the updates that occurred in the last reconstitution. So when it comes to this fund, unlike the S&P 500, which holds the top 500 companies, this one only holds 100. And while other funds may have some companies that are qualified to be within that fund but are lagging, SPMO is one that focuses on those all-stars that are actually driving market gains. So it's 10 years old now, so we can see a more complete history in detail when we look at the charts. But we already knew that it was outperforming. Let's take a look at the charts. As of the time that I'm recording, this ETF's price is $120.29 per share, which is a little below its record high of $122.62. It's basically been consolidating, which means that overall it's been moving sideways in a tight range, not breaking out or breaking down very much. You can think of it as needing to catch your breath after you're pushing yourself in a hard workout. So this often happens after a strong rally like SPMO has had. Year to date, it's up 26.63%. And over the last year, it's up 29.38%. So as far as consolidating, it can be a good sign when it follows a big rally like this. There's no heavy selling and the volume and trading activity remains consistent. So right now we're waiting for this to break above that high of 122.62 with volume behind it to see how much further this ETF can continue to push up. This fund has been gaining due to those AI giants, payment leaders, and large cap momentum stocks. So now let's get back into that rebalancing that happened in September. It added more tech and financial exposure to the funds and rotated out those weaker names. So when it comes to the sector breakdown, we have about 34% technology, 20% financials, 16% communication services, and 10% industrials. So we'll see how those big changes will pay off. Some slower moving companies, if you can believe it, like Amazon, Tesla, and replace some faster growing momentum leaders like Visa, Oracle, and Cisco Systems, which we'll take a look at in a minute. But let's just go through a few more names in the top 10 holdings. We have Broadcom, NVDA, Meta, JP Morgan Chase, Palantir, Netflix, Walmart, and GE. Okay, so taking a quick look at year to date, those additions into the funds Oracle is up 68%. Cisco Systems is up 19.32%. And Visa is up just 9%. But they are expected to be benefiting from the easing of the interest rates, which will be good for the payment sector. So these moves show how this fund, SPMO, takes the time during those rebalancing to adapt to changes, not just when it comes to technology, but staying focused on financials as well as industrials. That momentum rotation, that brings something different to funds, unlike the ones we're going to be taking a look at, QQQM and SPLG, which tracks the S&P 500, where a dominant company like Amazon is definitely going to be in that top 10. SPMO makes sure to shift and be in line with what is going on. So if one sector slows down, it's willing to pivot to whichever one has that fresh momentum. For example, back in 2022, when those interest rates were climbing, SPMO shifted more towards financials and energy in order to limit their losses. And then in 2023 and 2024, when AI was really thriving, they were able to rotate back into some of those growth stock, which helped them to crush the results as compared to other funds. So we're going to take a look at QQQM, SPLG, and SPMO on the chart. But just to review a few other differences, you see that QQQM is 55% technology and heavily weighted in those Mag 7, the Amazon, Tesla, Apple, Google. This fund also has 100 holdings, but we'll see how it performs much differently. And then same thing goes with the S&P 500 fund, SPLG, 35% weighted into tech, but those same big names are in the top 10, Microsoft, Meta, as well as the others that we just took a look at that have that overlap with QQQM. But taking a look over the last 5 years, we see that SPMO is up about 149%, while QQQM is up about 120, and the S&P is up 110. Looking out further, now that we can, a whole 10 years of data, SPMO is up 433%, while the S&P is up 292 and QQQM is up about 112. We can see that there is a serious difference here, and that momentum investing can ride those market waves instead of just staying stuck in one lane. So these long-term results are not just luck. They're following a structure based on momentum and price strength. Staying diversified, but concentrated enough into those top holdings that really allow them to drive this type of performance. And overall, I feel that an expense ratio of 0.13%, considering the growth that this fund has been achieving, is reasonable. It does have a lower dividend yield of 0.64% as compared to funds that track the S&P 500 like SPLG at about 1.2%, and QQQM has a dividend yield of 0.50%, but it also has a higher expense ratio and lower performance. As I said at the start of this video, I just got to 100 shares today, and I'm going to still be buying and building up this position a bit more. I believe that this momentum strategy works, and I'm someone who is focused on staying diversified, holding for the long term, and so I'm making this a core investment in one of my IRAs. So now let's take a look at my position, and I just started building into this one. When it comes to SPMO, I have an average cost basis of $119.52. I'm up 0.57%. We just recently had that rebalancing last month. The share price has pulled back a little bit, just over $120. So I'm going to continue building and waiting for that break above that 122.62. I am a long-term investor. I DCA every day, adding somewhere throughout my portfolios. I'm okay with investing through these periods of consolidation. On those red days, I zoom out on the charts and have a long-term plan for my investment strategy. Remember, nothing that I share here is ever a suggestion for you to buy, hold, or sell. I am sharing my personal investment journey, and this is one that I'm going to be continuing to build on. I will be back in the future with another update. Thanks for watching. Let me know your thoughts on this ETF. Let me know what is your favorite ETF. And don't forget to like, subscribe, and hit that notification bell. Okay, bye.